The American housing market isn't just cooling, it's experiencing a regional rupture that's already torn through 3.5 years of pandemic-era price gains in the worst-hit cities. And on a peak-to-current basis, it has now overtaken the 2008 housing crash. In just the past 12 months, Punta Gorda, Florida home values have collapsed 11.5%, the steepest annual decline in the entire country. Cape Coral has lost more value than any major metro in America. Austin, Texas is down a stunning 27.3% from its 2022 peak, roughly 3 times worse than what Austin lost during the entire 2008 financial crisis. And here's what's truly disturbing. According to the American Enterprise Institute Housing Center, the most influential housing research institution in the country, we're likely only seeing the beginning. Their official projection, U.S. home prices go negative by year-end 2026, then drop another 2% in 2027 and another 2% in 2028, a 3-year decline, officially forecast, already in motion. That's why today we're ranking the top 10 cities where home prices are crashing faster than 2008, and why this is one of the most important videos we've ever made for this channel. Before we go inside the countdown, you need to understand the 4 forces ripping value out of these markets. American Enterprise Institute Housing Center, home price growth in February of 2026 hit 1.1%, the lowest reading since their data series began in 2013. Adam Data Solutions, foreclosure filings up 26% year over year, bank repossessions up 45%. Florida bank repossessions more than doubled in 12 months, from 487 properties to over 1,000. Mortgage Bankers Association, FHA delinquency just hit 11.52%, the highest level since the second quarter of 2021. And the United States Census Bureau just confirmed that the Tampa Bay Metro lost nearly 12,000 residents in a single year, the second largest county population decline in the entire United States. What we're about to show you is going to change how you think about the next 12 months in American real estate. If you own a home in any of these 10 markets, or you're thinking about buying in one, the next 13 minutes could save you tens of thousands of dollars, or cost you everything if you ignore them. Here's the thesis you need to understand before we look at a single city. The cities that flew highest during the 2020 to 2022 pandemic boom are the ones now collapsing the fastest. American Enterprise Institute calls this a reversion to the mean. We're going to call it what it actually is. It's the slowest motion real estate disaster in modern American history. Look at the numbers. Austin home prices doubled during the boom. They went from $297,000 in late 2019 to $593,000 at the peak in mid-2022. Phoenix gained 60%. Cape Coral nearly doubled from $239,000 in May of 2020 to $436,000 by May of 2022. By comparison, Cleveland, Memphis, and Kansas City gained between 25 and 33% over the same window, and those cities are now leading the country in price appreciation. Kansas City is up 8.6% year over year. Cape Coral is down 9.6%. The spread between America's best and worst housing market right now is over 18 percentage points, the widest gap American Enterprise Institute has ever recorded. Now, think about the timeline. The 2008 housing crash peaked in early 2006. It didn't bottom until 2012, 6 years. The current crash started in mid-2022. We're 3.5 years in, and prices are still falling. The Federal Reserve Bank of St. Louis Case-Shiller National data confirms it. Cotality, formerly CoreLogic, confirms it. And here's the kicker. In several specific metros, today's peak-to-current decline already exceeds what those same cities lost during the entire 2008 cycle. We'll get to which ones. So with the macro picture in mind, let's go through the top 10 cities, starting at number 10 and working our way to the city that has lost more home value faster than any major metro in America. Number 10, Memphis, Tennessee. You weren't expecting this one to lead off, were you? Memphis didn't bubble during the pandemic. It gained around 25%, modest by Sunbelt standards. And yet, American Enterprise Institute Housing Center ranks Memphis among the 5 worst performing major metros in America, with year-over-year declines between 3.8 and 6.1%. Redfin shows the city of Memphis median sale price down 7.1% year over year. selling for $170,000 with homes sitting on the market longer than last year. Why does this matter? Because Memphis is the canary. If a market this affordable is bleeding 7% year over year, that tells you something about the buyer pool that has nothing to do with hurricanes or insurance or climate risk. It tells you the affordability damage is national. It just shows up first in the cities that overheated the most. Number 9, Phoenix, Arizona. The poster child of the pandemic boom, where home prices ran 60% in 24 months. Phoenix is now down 10% from its July 2022 peak, according to Zillow Home Value Index data. Redfin shows the median sale price in the city of Phoenix down 5.2% year over year, at $460,000, 25,000 active listings, months of supply pushing into buyers' market territory. And here's the twist. The Census Bureau just confirmed Maricopa County added 57,000 people in 2024 to 25, the fifth largest county-level population gain in America. People are still moving to Phoenix in massive numbers. Prices are still falling anyway. That tells you everything you need to know about whether migration alone can support these post-bubble valuations. It can't. Number 8, Jacksonville, Florida. Florida's gateway city. Zillow Home Value Index for the Jacksonville Metro now sits at $348,000, down 2.3% year over year. Adam Data Solutions ranked Jacksonville as the 11th worst foreclosure rate among major metros in the entire country in their Q1 2026 report. 6.3% of all mortgages in Jacksonville are now underwater, according to Intercontinental Exchange Mortgage Technology. That means the homeowners owe more on their mortgage than the home is currently worth. And it's about to get worse. First Street Foundation, the climate risk research group, projects Jacksonville home insurance premiums will rise 226% over the next 30 years. That's not a typo, 226%. Number 7, Las Vegas, Nevada. In the 2008 housing crash, Las Vegas fell 63.9% peak to trough, the single worst major metro in America. And now, Zillow Home Value Index data shows Las Vegas down 3% from its June 2022 peak, with year-over-year declines accelerating. 22,000 active listings, up nearly one-third year-over-year. Inventory rising 22% in 2025 alone. Nevada's foreclosure rate is now the 6th worst in America, 1 in every 847 housing units. Net domestic migration into Las Vegas more than doubled this past year, from 5,000 to over 12,000. People are flooding in. Prices are still bleeding. Sound familiar? Because it should. This is exactly what you want to remember when somebody tells you, but everybody's moving to the Sun Belt. So were they in 2006. Quick favor. If you're getting value from this analysis, hit subscribe and turn on the notification bell. We track these markets every single week, and when one of them hits an inflection point, we want you to know about it the day it happens, not 3 months later when the local news in your city finally catches up. Bell on. Let's keep going. Number 6, Tampa, Florida. The S&P Totality Case-Shiller 20-City Composite, the most watched housing index in the world, just confirmed that Tampa is the worst performing city in the entire index, down 2.5% year over year on the latest January 2026 reading. And here's the part that should stop you cold. That is now roughly 15 consecutive months of year over year price declines on Case-Shiller. Every single month for over a year, Tampa has been the bottom of the leaderboard. Realtor.com's 2026 forecast calls for another 3.6% decline in Tampa this year on top of what's already happened. But the real story isn't the price drop. It's what the Census Bureau just confirmed. Pinellas County, the county that contains St. Petersburg and a huge chunk of Tampa Bay, lost 11,834 residents in a single year, the second largest county-level population decline in the entire U.S. Only Los Angeles County had a bigger numeric drop. People are leaving Tampa Bay faster than almost anywhere else in America. Wait, it gets worse. Number 5, Northport, Sarasota, Bradenton, Florida. Down 17.4% from the July 2022 peak, according to Resi Club Analytics tracking the Zillow Home Value Index. Zillow's data on the city of Northport specifically shows home values down 9.3% year over year, among the steepest annual drops of any major Sarasota area city. And Realtor.com's 2026 forecast is calling for an additional 8.9% drop on top of what's already happened, the second worst projected decline of any major metro in the country. This is the metro that took a direct hit from Hurricane Milton in October 2024. Cat 3 landfall on Siesta Key. The National Weather Service called the storm surge between Sarasota and Englewood perhaps the most destructive in the area's history. Bradenton beach homes were swept off their stilts. Federal Housing Finance Agency data ranked Northport Sarasota Bradenton as the single worst major metro in America for home price decline through Q2 of 2025, down 11.2%. It still hasn't found a bottom. Number 4, Austin, Texas. This is the headline. Austin home prices are now down 27.3% from their May 2022 peak, according to Resi Club Analytics tracking Zillow Home Value Index data. The largest peak to current decline of any major metropolitan area in the United States. Zillow's metro median home value sits at $487,000, down 10.4% in just the past year. Almost 47% of all active Austin listings have had at least one price cut. Months of supply has hit 5.5, the highest in over a decade. Now, compare that to history. In the 2008 cycle, Austin fell 8.5% from peak to trough. The entire crash took 43 months to unwind. Today, Austin has lost 27% in roughly the same span. 3 times deeper, same pace. Intercontinental Exchange mortgage technology data shows 9.2% of all Austin mortgages are now underwater, the third worst rate in the entire country. And among Austin homeowners who bought in 2023 or 24, roughly 1 in 4 is already underwater on their loan. They paid more for the house than it's worth right now. That's what reversion to the mean looks like in the field. Now, I'm going to say something that I believe most housing analysts in this country are too polite to say out loud. Every single one of these price declines is fundamentally a Federal Reserve decision. The Federal Reserve has the single button that could meaningfully slow the collapse. They could lower rates. They've chosen not to. And every month they keep the federal funds rate where it is, more American homeowners go underwater on their mortgages. More foreclosures get filed. More families lose equity they spent 5 years building. Mortgage Bankers Association data shows FHA delinquency at the highest level since the second quarter of 2021. Cotality's Q4 2025 Homeowner Equity Report shows 1.1 million American homes are now in negative equity, up 15% in a single year. The combined value of negative equity in this country is $366 billion. Florida, California, and Arizona homeowners lost the most equity of any state, and the Federal Reserve, looking at all of that, has decided the inflation fight matters more than the housing pain. That's a choice. It's an institutional choice. And the people watching this video, the homeowners and buyers, are the ones paying for it. Tell us in the comments whether you think the Fed is right or wrong on this one. We want to read what you think. Number 3, Cape Coral, Fort Myers, Florida. The official worst-performing major metro in the entire United States, according to the American Enterprise Institute Housing Center's most recent reading, down 9.6% year over year, 18.8% from the 2022 peak. Realtor.com's 2026 forecast is calling for another 10.2% drop in 2026, the steepest projected decline of any major metro in America. Mid-2025 data from Parcel Labs showed over half of all Cape Coral listings were cutting prices, compared to a national average of around 34%. Cape Coral has more underwater homeowners than any other city in the country, according to the Wall Street Journal analysis of Parcel Labs data. Almost 8% of all mortgaged homes are worth less than the loan against them. And here's the part nobody's talking about. After Hurricane Ian in 2022, FEMA pulled Cape Coral's flood insurance discount because the city allowed improper rebuilding. Flood insurance rates jumped 25% overnight. That happened to the same homeowners who are already watching their property values collapse. That is what a slow-motion disaster looks like in real life. Number 2, Lakeland, Florida. Lakeland holds a title nobody wants. According to Adam Data Solutions' Q1 2026 foreclosure market report, Lakeland has the worst foreclosure rate of any major metro in America. 1 in every 409 housing units, Number 1 in the country. Intercontinental Exchange mortgage technology data shows 10.8% of Lakeland mortgages are now underwater. Also, the worst metro reading in America. Cotality has flagged Lakeland Winter Haven as one of the top 5 highest risk markets for further price declines for 2 consecutive months running. This isn't a market correction. This is a market unwinding. If you made it this far, you already know more about the actual state of American housing than 99% of homeowners watching cable news. Drop a like on this video. It genuinely helps us reach more homeowners who need this data. And in the comments, tell us which city in this top 10 is closest to where you live. We read every single comment. Let's keep going. Number 1 is the one that breaks every record. Number 1, Punta Gorda, Florida. Punta Gorda is the city that took the most direct hit from the 2008 housing crash on a percentage basis. Now, 18 years later, Punta Gorda holds the title for the steepest single-year home price decline in the entire United States. Zillow Home Value Index data, March 31st, 2026. Punta Gorda metro home values are down 11.5% year over year. The typical home is now worth $297,000, down from a peak of close to $400,000. 25.3% below the July 2022 peak. Adam Data Solutions ranks Punta Gorda as the second worst metro foreclosure rate in America, 1 in every 416 housing units. And here's what makes Punta Gorda the one that breaks every record. It got hit by 3 direct impact hurricanes in 25 months. Ian in September of 2022, Helene in September of 2024, Milton in October of 2024. The same homeowners, the same houses, 3 storms. The downtown Celtic Ray pub flooded for the second time in 3 weeks during the Helene-Milton stretch. National Oceanic and Atmospheric Administration estimates put Hurricane Ian's total damage at $112.9 billion, making it the single costliest hurricane in Florida history. Punta Gorda was at the center of all 3 storms. Selma Hepp, the chief economist at Cotality, recently filmed a market analysis on the ground in Punta Gorda. Her assessment was unambiguous. She said Southwest Florida home prices are down between 10 and 15% from the peak, and that some of these markets are now considered normal, no longer overvalued. Translation: the bleeding may slow, but the equity that's already gone is gone. So what does this all mean for you? Well, it depends on which seat you're in. If you're a homeowner in any of these 10 markets, your number 1 priority right now is checking your loan-to-value ratio. If you bought in 2022 or later in Cape Coral, Austin, Tampa, Punta Gorda, or Northport, Sarasota, there's a real chance you're already underwater. Don't refinance assuming your house is worth what you paid for it. Get a current appraisal first. If you're a buyer, this is the most leveraged position you've had in years. 47% of Austin listings have a price cut. Over half of Cape Coral listings have a price cut. Builders are running 10 to 14% incentives. You can offer below list and demand seller concessions and ask for rate buydowns. The frenzy is over. Use it. If you're a seller in any of these 10 markets, the worst thing you can do right now is anchor to peak 2022 pricing. The market doesn't remember what your house was worth in May of 2022. The market remembers what it's worth this week. There's one math problem buried inside every single one of these 10 cities, and it's the reason none of this is going to reverse quickly. Take a $400,000 home, 20% down, $320,000 loan, 30-year fixed. At 3%, what buyers were getting in 2021, the monthly principal and interest payment is $1,349. At 6.5%, what buyers are getting today, the monthly payment on the same loan is $2,023. Same house, same loan, $673 more per month. Roughly $242,000 more in lifetime interest. The buyer at today's rate is paying 50% more per month for the exact same property. That's why home prices in these 10 cities are falling. Not because of hurricanes, not because of insurance, not because of climate change. Because the monthly payment math doesn't work for a buyer pool that's been priced out by Federal Reserve policy. And that's why this isn't going to reverse until either rates come down meaningfully or prices fall far enough to make the math work again. When 55% of a city's listings are slashing prices, that's not a correction. That's a fire sale dressed up as a market. Subscribe and hit the bell so you don't miss next week's video. We're going inside the 7 master planned communities where D.R. Horton just slashed prices by $80,000 per unit overnight. And what their CEO just admitted on the most recent earnings call is going to make every Phoenix and Austin homeowner sick to their stomach. You're going to want to be subscribed for that one. Until then, protect your equity, watch the data, and stay ahead of the next inflection. We'll see you in the next one.